Pambansang Awit ng Pilipinas.
Kayang magiliw, pero sa silakanan, hanap ng puso, sa titik mo'y bugay. Lupang pinirang, tuyag ka ng magiting, sa manluluping, di ka pasisigil, sa nagatak tutok sa simoy at sa langit mo bagaw, ay nilagang tula, kawin sa pagkayang minamahal, ang isang ng matawad mo'y tagumpay na nag-iindig, makituwin at araw niya kailan pamaliw at itindig, lupa ng araw ng walhating pagsinta, mo'y langit sa piling mo. Ang ligaya ng pagkay maghahabi, ang mamatay ng dahil sa'yo.
Okay, to start, it is my honor to introduce to you the very capable and hardworking leader behind the success of RDO number 24 Valenzuela City. Let us all welcome our Assistant Revenue District Officer, Florita N. Morales, for her opening remarks.
Thank you, Sir Arjen. Good afternoon. Hello, everyone. Welcome to this webinar. This afternoon, our speakers will discuss the Corporate Recovery and Tax Incentives for Enterprises, or CREATE Act, which took effect on April 11, 2021. In the past, taxpayers are not into praising new tax measures because oftentimes it seems more burden. However, in CREATE Act, it did not look this way. The government, through the BIR, issued rules and regulations for the implementation of the CREATE Act that provides tax relief measures that will help our taxpayers to recover from the losses as a result of this COVID-19 pandemic. I hope everyone will gain through this knowledge for the discussions of our notable speakers, Ma'am Georgette Balahadja and Sir Arjen Mirabuna, and Ms. Karen Depante. Without further ado, I will turn over the time over to our notable speakers. Good afternoon po sa inyong lahat.
Thank you, Ma'am Ardo. Now, we will turn the time over to our two very competent and very reliable speakers to dissect the bits and pieces surrounding the formation of CREATE law. First up, I am privileged to introduce to you the first of our two keynote speakers this afternoon. With her years of service and experience in the Bureau, no one is more appropriate to conduct this webinar. She graduated with a Bachelor of Science degree in Accountancy at the Polytechnic University of the Philippines. She is a certified public accountant by profession, and to further her studies, our guest speaker also took up a master's degree in commerce and taxation at Manuel Luis Quezon University. In addition, hereto, she furthered her professional growth by taking up a doctorate degree in philosophy at the same university. Currently, she is a part-time professor at the University of Caloocan City, South Campus, while being one of our esteemed group supervisors here in RDO24 Valenzuela. Without further ado, I am pleased to introduce to you our guest speaker, Ms. Georgette Balahadja.
Good afternoon.
Hello, good afternoon. Sorry for the technical difficulties. Hello. So before we begin our webinar, in-encourage ko lang po sana kayo na mag-like po kayo sa aming Facebook page para updated po kayo sa mga tax issuances at saka kung may mga announcement po si BIR RDO24. And also para lagi rin po kayo updated kung meron po tayong mga webinar kagaya ngayon. Next slide. So, RA11354 or the CREATE Act was signed by President Duterte March 26, 2021. So, it is the Train Part 2 or the formerly known as Sitira Bill before po siya mapunta sa pagiging batas po. So, the CREATE Act was purposely signed or nagawa po siya para makatulong pong ma-reduce ang ating income tax rates. Also, it provides other tax relief measure that will help the businesses. Yung mga businessman, particularly those organized as corporation, including the one-person corporation, to recover from the effect of the pandemic, as well as the measure that will rationalize the grant of fiscal incentive to targeted investors. So, makakatulong po kasi itong CREATE na to para makapag-encourage po tayo ng mga additional investors dito sa bansa natin, lalong-lalo na naapektuhan po ng gusto ang ekonomiya ng bansa po natin. So without further ado, let's begin with the RR 5-2021, which is one of the implementing rules and regulation of the CREATE Act. So RR 5-2021 is the implementing of the new income tax rate on the regular income tax of corporation on certain passive income, including additional allowable deduction from gross income on person engaged in business or practices. Next. So ang bago lang naman dito usually is the one-person corporation. Doon sa ating definition of term, mahaba kasi yung binigay ni RR 5-2021. So however, ang medyo bago po nga dito is the one-person corporation. Si one-person corporation, ito po yung kasama po dun sa inamend na corporate code, which is meron na po tayong one-person corporation with a single stockholder, provided that only a natural person, trust, or an estate may form a one-person corporation. Okay? So here are the summary of the new corporate income tax rate. First, for the domestic corporation, we have the 25% na tax rate effective July 1, 2020, which is in general ito po. However, yung 25% pwede pa siyang bumaba as 20%, which is ang condition niya ay para maging 20%, ang corporation should have a net income or the net taxable income not exceeding 5 million pesos. And yung total asset niya po ay not exceeding din po ng 100 million pesos. Deducted po yung land on which the particular business entities, office, plant, and equipment are situated. So, pag hindi po na-meet itong dalawang ating condition, babalik po tayo sa 25%. So, either 25 or 20% po ang magiging bago nating corporate income tax rate effective July 1, 2020. However, the MCIT, both po, kahit ma-satisfy yung dalawang condition, pareho po silang magiging 1% effective July 1, 2020 up to June 30, 2023. Okay? So up to July 1, 2023, babalik na po ulit si MCIT to 2%. Next, for the proprietary educational institution and hospitals. So effective July 1, 2020, 1% na lang po siya. However, babalik siya into 2% July 1, 2023. However, according to RR 14, 2021, paklik niya. Suspended po siya sa paklik. Yeah, suspended po siya according to RR 14, 2021. Next slide. So here is the summary po. Sinabi po natin ng mga domestic corporation, which is bago na po, 25% in general. Pag na-meet yung condition, 20% po. And lastly, yung proprietary or educational institution ay 1%. However, suspended nga po siya ng RR 14-2021. Okay, next. We go now to the foreign corporation. So, si foreign corporation, nagbago na rin po yung kanilang mga tax rate effective July 1, 2020. For example, si resident foreign corporation, from 30% naging 25% na lang po siya. Okay. Next, and yung MCIT niya, 1% effective upon effectivity of the CREATE. So, effectivity ng CREATE, April 6, 2021 until June 30, 2023. Tapos, babalik na rin po siya uli ng 2% July 1, 2023. Next, si OBUs naman. From 10% usually, so si 10% po kasi yung ating mga regular OBU and 30% naman yung other income naman ng foreign currency na transaction ni OBU. Pero ngayon, effective ng CREATE, OBU shall now be taxed as resident foreign corporation upon effectivity nga po ni CREATE at 25% po. So, upon effectivity po ni CREATE, which is April 11, 2020. Or 15 days upon the pagsasign po ni President noong March 26 or April 11. For the ROHQ or the Regional Operating Headquarters, previously 10%, now 25% po. Effective naman po, January 1, 2022. So as you can see, so foreign corporation, iba-iba po yung effectivity date po nila. However, yung kanyang MCIT, same po. Halimbawa, si ROHQ, kung ang effectivity ng pagbabago ng kanyang tax rate ay January 1, 2022, yun din yung effectivity ng pagbabago ng kanyang MCIT. Okay? January 1, 2022 up to July 1, 2023. So, next slide. For the non-resident foreign corporation, we have 25% na po from previous 30%. Effective January 1, 2021 naman po. So kanina, January 22, January 2022, ngayon January 1, 2021 naman po. And MCIT is not applicable. So next slide. So now you can see the summarized different rates ng foreign corporation natin. Pero kung makikita nyo, inisa na po sila. Pare-pareho na po 25% ang ating mga foreign corporation kahit magkakaiba sila ng function. Si resident foreign corporation, OBU, ROHQs, at si non-resident foreign corporation, all of them 25% na po upon different effectivity. So magkakaiba po yung effectivity date po nila. Ang MCIT, kung ano po yung effectivity date ng kanilang regular income tax rate, so yun din po ang kanilang MCIT. However, pareho po silang babalik sa 2% July 1, 2023. So next slide. Okay. So to illustrate some problem about domestic corporation. LBM Corporation, a retailer, has a gross sales of 1.4 billion with a cost of sales of 560 million and allowable deduction of 150 million for the calendar year 2021. Its total asset is 180 million as of December 31, 2021 per audited FS. Included po dun sa audited FS is yung land costing 50 million and a building of 25 million pesos, in which the business entity is situated with an aggregate amount of 75 million ako. Pag inad mo yung dalawa yan. As its fixed asset. Assuming calendar year 2021 is the 5th year of operation of LBM Corporation, compute the income tax due. So to answer that, so regular rate po na gagamitin natin is 25%. Why? Kasi hindi po na-satisfy yung dalawang condition. In this problem, the net taxable income is above 5 million. So 690 nga siya. So hindi na po siya qualify. So ang gagamitin po natin tax rate is 25%. The net taxable income, pag kinompute po natin, multiply by 25%, the regular income tax due is 172,500,000. And the MCIT, gross income multiplied by 1%, the tax due would be 8.4 million. So whichever is higher, the regular income tax rate would be 172,500,000. So next slide. So that is a simple problem related sa pagbabago po ng ating income tax, corporate income tax rate. Given the same facts naman, under illustration 8.2 or the previous problem, except for the allowable operating expense, which is amounted to 85 million. The net taxable income would be, so next slide. So answer po is the net taxable income will be 5 million pesos, which with this, the amount of income tax rate or the income tax rate to be used will be 2%. And the income tax due shall be 1 million pesos po. In both illustration, MCIT shall not be applied kasi second year of operation pa lang yung next problem. Next. So, income tax rate naman on certain passive income. Meron na rin po mga pagbabago sa ating mga passive income. So, for the type of corporation, resident alien individual, yung mga winnings from Philippine Charity Sweepstakes Office or PCSO games amounting to 10,000, more than 10,000. So, the new rate will be 20% upon effectivity of the CREATE or April 11, 2021. Also, the winnings from PCSO amounting to 10,000 and below, syempre, exempt pa rin po siya. Previously kasi, yung ating winnings from PCSO, regardless of the amount, exempt po siya. However, upon the effectivity ng CREATE or ng train pa nga ay subject na po siya sa final tax. Next slide. For domestic corporation, yung mga intercorporate dividends, domestic and foreign source dividends. For the domestic corporation na nakatanggap ng domestic dividends from the domestic corporation, exempt pa rin po siya. So, however, pag si domestic corporation ay nakatanggap ng dividends sa foreign or non-resident foreign corporation, subject po siya sa 25% or 20% as the case may be, depending sa corporate income tax ni dividend or the domestic corporation. Effectivity for the foreign source dividends, ngayon po, upon effectivity ng CREATE, this will be exempt from income tax, subject to the conditions imposed by Section 5 of this regulation or the RR 5-2021. Next slide. So, tandaan po, pag si domestic corporation ay nagbigay ng dividends kay domestic corporation, then exempt. Pero pag si foreign corporation ay nagbigay ng dividends kay domestic corporation, possible or pwede siyang maging exempt. Pero, kailangan lang ma-satisfy ang mga condition na ipapaliwanag po sa mga susunod po nating slide. Next, Passive income is the resident foreign corporation. Ang nature ng income, interest income from depository bank under expanded foreign currency deposit system. 15% na po siya upon effectivity of the create or April 11, 2021. And also the capital gains from sale of shares of stocks not traded in the stock exchange, 15% upon effectivity of the create. Okay, malinaw po. Next slide. For the non-resident foreign corporation who receive income from all sources within the Philippines, such as interest, dividends, rents, royalties, salaries, premiums, except pre-issuances, premiums, annuities, emoluments, and other fixed or determinable annual, periodic or casual gains, profits and income, and capital gains, except capital gains from the sale of shares of stock not traded in stock exchange. So the rate would be 25%, effectivity po January 1, 2021. Next slide. So ito po siya yung kanina sinabi natin. Si non-resident foreign corporation, intercorporate dividends received from a domestic corporation, 25%. So ito, dito naman sa scenario na to, si non-resident foreign corporation naman ang naka-receive ng intercorporate dividends from a domestic corporation. That is 25%. So however, if the country in which the non-resident foreign corporation is domiciled allows a tax credit equivalent to the difference between the regular income tax rate of 25% under Section 8B1 of the tax code, 25% and the 15% tax on the intercorporate dividends, or does not impose tax on dividends, the rate shall be imposed shall be 15%. So either 25 or 15% po ang magiging rate po niya. And lastly, the capital gain from sale of shares of stocks. Okay po. Next slide. So here are the conditions for domestic corporation will be exempted from income tax on foreign source dividends. So sabi nga natin si foreign source dividend na na-receive ni domestic corporation, pwede po siya maging exempted. However, it should satisfy this condition. So number 1, or letter A, the dividends actually received or remitted are reinvested in the business operation within the next taxable year from the time it was received. And next condition, dividends received shall only be used to fund the working capital requirements, capital expenditure, dividends payment, investment in domestic subsidiaries, and infrastructure project. So anything na may na-receive mo yung dividend, tas anything na hindi na include dito ang paggagamitan mo, ay subject siya sa income tax. Pero pag nandito sa mga binanggit na ito, yung paggagamitan mo ng as your working capital, capital expenditure, dividend payments, and so on, yung mga nabanggit dito, magiging exempt po siya, provided ma-satisfy niya lahat ng condition. Next, letter C. Domestic corporation holds directly 20% in value of the outstanding shares. So, dapat daw sa domestic corporation, hawak niya or mayroon siyang shareholding na 20% in value. And hawak-hawak niya itong shares na to within uninterruptedly for minimum of 2 years at the time na yung dividends ay ibinigay po. So, pag hindi po na-satisfy to, below 2 years ang nakawang dividends, taxable po siya. Or pag halimbawa, hindi naman 20% yung holdings mo na shares, ay hindi ka rin kasama dito. So, hindi mo na-satisfy yung condition letters. Next. So, ito, karugtong uli ng letters. In case na si foreign corporation has been in existence for less than 2 years. Ito naman, syempre, pag less than naman si foreign corporation, hindi mo masasatisfy yung 2 years na sinabi niya. However, the domestic corporation must have continuously held at least 20%. So, at least yung isa na lang na condition, 20% yung pinangahawakan mong shares dun sa foreign company po na ininvestan mo. Kahit na hindi mo na masatisfy yung 2 years na uninterruptedly na hawak mo siya. Kasi nga, si foreign corporation ay hindi pa naman nag-exist ng more than 2 years. Okay, next. How to avail naman this exemption? So you have to go to the concerned BIR office within 30 days from the actual receipt or remittance of the dividends. Tapos, dadalhin mo po yung sworn statement or affidavit. Itong sworn statement or affidavit, ito po yung laman niya. Number one, fact of actual receipt of such dividends. So, kailangan may actual receipt po talaga ng dividends. Anong possible nito? Yung remittances o kaya yung bank certification na may na-receive kang dividends from foreign source company. And then, amount of and the source. So, yung amount and source dapat naka-indicate dun sa sworn affidavit mo. Kung sino at magkano ang dividend. Sino ang pinanggalingan na non-resident foreign corporation. And magkano yung nakatanggap mo. Including their shareholdings. Kung ilang taon mong hawak ito at kung ilan yung percentage ng shareholdings mo doon sa stocks na meron ka sa kanila. And lastly, yung statement po na okay, next. Okay, next. You have also to attach the audited FS and an independent auditor sworn certification. So, included din po dun sa independent auditor sworn certification is yung fact of actual receipt ng dividends. Halos same lang dun kanina sa sworn affidavit. Ang pinagkaiba lang ay mayroon ka ditong ilalagay na amount of disbursement, kung magkano na yung na-disburse mo. So, ang kinaibahan lang, so dito, kailangan dito sa independent auditor sworn certification na i-attach mo sa kayong audited FS, yung amount na na-disburse mo just in case, and a statement that the said disbursement complies with the above requirements. So, dapat si disbursement na nagamit mo na doon sa iyong foreign source dividends is kailangan ginamit mo nga doon sa mga working capital requirement, capital expenditure, and so on. And the fact that the domestic corporation through its board has decided a plan. Saka yung plan nga na or board resolution or meron kayong meetings na nakalagay doon na ang yung napagdesisyonan ng board na yung inyong foreign source dividend ay gagamitin po para doon sa mga condition na nire-require ni RR5-2021. So next slide. Pareho lang sila ni sworn affidavit halos. Okay, next. And last, attached to the ITR a sworn certification prepared and executed by an independent auditor on the utilization and non-utilization of the dividends received. So, meron pang another sworn certification. Ito naman sa utilization and non-utilization ng dividends na na-receive po natin from the foreign source corporation or for the foreign corporation. Next. So to illustrate, paano tingnan natin kung ano ang mga sample problem na related dito sa ating foreign source dividends. So RLI, a domestic corporation, owns 20% of the outstanding share. So check na siya, 20% daw yung shareholdings niya. Of the USA corporation, a non-resident foreign corporation, since August 1, 2015. So August 1, 2015, hawak niya na yung shares niya doon sa USA corporation. On June 30, 2021, naka-receive daw siya ng dividends amounting to 1 million from the said and RFC or the non-resident foreign corporation. The said dividend has been used until January 13, 2023. Na-receive niya June 30, 2021 and hindi niya pa nagagamit hanggang June 13, 2023. How much will be the taxable income in year 2021? So next slide. In this case, 1 million shall be declared as taxable income kasi hindi naman siya na-utilize nung succeeding year. So for the calendar year 2021, ang taxable income nga niya is 1 million subject to surcharge, interest, and penalty kasi hindi yan na-utilize the next succeeding taxable year, which is 2022. So next slide. For the improperly accumulated earnings tax, it is shall no longer be imposed on corporation upon effectivity of the create onwards. So upon effectivity, April 11, 2021, hindi na po siya i-impose sa mga corporation. This shall apply to the entire taxable year for all fiscal years. Taxable years ending after the effectivity of the create. So hindi na po siya applicable ngayon. Next. Allowable deduction from gross income on business person. So, hindi lang to applicable sa mga corporation. Ito po ay applicable din sa mga individual. So, meron po tayong mga additional allowable deduction na nadagdag po dito sa ating create law. So, additional deduction po on training expense. So, an additional deduction from taxable income of 1/2 of the value of labor training expense incurred for skills development of enterprise-based trainees enrolled in the public senior high school, public higher education institution, or public education institution, or public technical and vocational institution, and duly covered by an apprenticeship agreement under Presidential Decree 442 Series of 1974 or the Labor Code of the Philippines as amended, shall be granted to enterprise. Next. Provided further that for the additional deduction for enterprise-based training of students from public educational institution, the enterprise shall secure proper certification. So, kailangan po, para ma-claim natin itong additional deduction na to, you should secure proper certification from DepEd, TESDA, or CHED. Provided finally that such deduction po na pwede nating ma-claim additional shall not exceed 10% of the direct labor wage. Next, we have also additional deduction po, yung interest. So, taxpayers' allowable deduction on interest expense shall be reduced to 20%. So, dati kasi 33% po siya. Ngayon, 20% of interest income subject to final tax. However, if the final withholding tax rate on interest income of 20% will be adjusted in the future, sa future po, the interest expense reduction rate shall be adjusted accordingly. Hindi pa naman siya fixed na 20%. Next, we have the interest arbitrage rule related po dito sa ating interest expense. So, reduce yung interest arbitrage rule po natin. Remember, it reduced the allowable deduction of interest expense by 20% of the interest income subject to final tax. Next. So, for the domestic corporation with a net taxable income of not exceeding 5 million and the total asset not exceeding 100 million, excluding the land on which the business entity's office, plant, and equipment are situated, the deduction is 0%. Since wala siyang difference because pareho silang 20%. Si interest arbitrage versus the income tax rate ay 20 pareho, so no difference in income tax rate on the net taxable income with the tax rate applied on interest income subjected to final tax na 20%. No interest arbitrage po dun. So also individual engaged in business or practice of profession, such deduction shall take effect upon the effectivity of the create. Next. So we have sample problem for that. Sa mga deduction po na additional na nadagdag dito sa ating rate. So, MOC Corporation, a domestic corporation, had a gross sales of 100 million for fiscal year ending June 30, 2021 and incurred a cost of sales of 60 million and operating expense of 17.5 million with the following details po. Ito po yung details niya. So, for the cost of sales, we have direct materials 30 million, direct labor 20 million, manufacturing overhead 10 million for the total of 60 million. Nabanggit nga po natin sa taas. Ito naman yung composition ng 17.5 operating expense. We have salaries and wages 7 million. Taxes 300,000. Depreciation 3.5 million. Professional fee 200,000. Advertising expense of 3 million. Training expense of 3 million. Office supplies 500,000. So total po niya is 17.5 million. Next. Also, it incurred interest expense of 400,000, which satisfied the prescribed requirement for the deductibility. Okay? So, but it also earned interest income of 100. Take note ha, 100,000 net of final tax. So, ibig sabihin, 80% na lang itong si 100,000. Dahil net na siya ng final tax. How shall the taxable income be computed? So, tingnan po natin ang ating solution. Next. So, for the gross income, makita po natin doon, sales less the cost of sales. So, 40 million na lang siya. So, less natin yung mga deduction, himay-himayin natin. So, given naman yung salaries and wages, 7 million. Taxes, 300. Depreciation, 3.5 million. Professional fee, 200,000. Advertising expense, 3 million. We have the training expense. So, dahil may training expense ka, we can have additional training expense na 1.5 million. Makita niyo po siya dun sa baba, yung mga additional deduction. So, how do you get the 1.5? So, training expense times 50% or additional percent 50% of the training expense. So that is 1.5 million. So kailangan masatisfy dapat ang condition na for the deduction of the training expense. Dapat hindi rin siya lalampas ng 20% ng iyong direct labor, which is ang direct labor natin ay 2 million. Times mo ng 20%, hindi naman siya sasampa doon yung ating additional deduction na 1.5. So, ang ating additional deduction for the training expense, 1.5 million. So, we go now to the additional deduction sa ating interest expense. So, sa ating interest arbitrage, makukuha po natin yung 25,000 na given. Yun makikita po natin dito sa answer is computin natin yung 100,000 na interest income divide by 80% kasi net na siya ng final withholding tax times 20%. That is 25,000 pesos. So, ang ating net taxable income, in effect, would be 20,625,000. So, yun po ang ating net taxable income. So, next slide. For the non-recognition of the gain or loss sa mga transfer po, no gain or loss shall be recognized on corporation. So if such corporation is a party to the organization and exchanges property in pursuance of the plan of the organization solely for stock or securities in another corporation that is party to the organization. So tandaan po, pag yun po yung ating condition or nangyari, wala pong gain or loss na ma-recognize si corporation. Also, if the property is transferred to a corporation by a person, alone or together with others, not exceeding 4 person, in exchange for stocks or unit of participation in such a corporation of which, as a result of such exchange, the transferor or transferors collectively gains or maintain control sa corporation po. Provided that the stocks issued for service shall not be considered as issued in return of the property. Next. Sale or exchanges of property used for business for shares of stocks under this subsection shall not be also subject to value added tax. Next. Transitory provision on interest arbitrage. So hindi na po natin susundin kasi dito sa RR 5 2021 meron pa siyang steps on how to compute the interest arbitrage. Kasi given din naman dito sa same regulation ng ating transitory rate table ng interest arbitrage. Applicable po ito kasi meron po tayong na-effect po kasi ang ating interest arbitrage July 1, 2021. So mag-aano po siya, magkakaroon po siya ng transitional rate. And meron ng given itong ating regulation para mas madali na po ang pag-compute natin ng transitory rate sa ating interest arbitrage. So, ang unang gagawin lang po natin, paklik ako. You have to get the annual accounting period. Kung anong accounting period ba meron ka. Baka fiscal ka or calendar. Pag calendar ka, syempre pupunta ka dun sa calendar year 12/31/2020. And kung fiscal year ka, pili ka na lang dyan kung saan fiscal year ended ka belong. And then, you have also to know kung saan ka bang tax rate magfo-fall. Kung dun ka sa general na 25% or kung dun ka ba sa 20% na nasatisfy mo yung dalawang condition on the amount ng net taxable income mo and the total asset. So, next. So, pag napili mo na kung saan accounting period ka, punta ka doon kung anong rate. So, itatapat mo lang siya. For example, for the calendar year 2020, ang tax rate mo ay 25%. So, 26.5 ka. However, pag halimbawa, under ka naman ng 20%, your interest arbitrage rate would be 16.5. So, depende kung anong taxable year and kung anong tax rate or corporate income tax rate na meron ka, under ka. Next. Transitory provision naman sa income tax. Ganon din si income tax. So, dahil effective siya July 1, 2020, so meron po tayong transitory rate sa ating calendar year 2020 or the taxable year 2020. So we have a sample problem. LMAT Corporation has had a gross sales of 110 million, cost of sales of 6 million, and operating expense of 2 million for the fiscal year ending October 31, 2020. Nasa third year of operation na po siya. Its total assets amounting to 5 million lang. It does not own any land or building where its business operation are conducted. So, computation for the income tax for 2020 shall be, next, gamit po tayo ng ating transitory rate. So, ang kanyang calendar year, paklik po. So, under siya ng fiscal year 10/31 or October 31, 2020. And magpo-fall po siya dun sa 20% na rate. So, ang gagamitin po natin ay 26.66. Next. Yeah, 26.66. So, you should get your, kukuhain mo lang ang yung net taxable income, which is 2 million pag kinompute. Times mo lang siya ng transitory rate, 26.66%. So, the income tax due for the fiscal year ended October 31, 2020 is 533,333.22. And yung long cut, makikita po niya po yan sa baba. So, ang gagawin mo sa long cut, yung diniscuss dito sa RR na to, which is hindi ko na diniscuss kasi medyo maguguluhan lang kayo, net taxable income, divide mo lang by 12. So, makukuha mo yung taxable income per month mo. So, yung taxable income per month mo, bibilangin mo kung ilang months applicable yung old rate and kung ilang months applicable yung new rate. So, for this, November 1, 2019 to June 30, 2020. So, 8 buwan po yun. Times mo yung monthly taxable income na 166,667 times 8 times 30%. And also for the new rate, so 4 months lang siya naglaro, 166,066.67 times 4 times 20%. So, makukuha po dun sa unang, sa old rate na 400,000 and sa new rate na 133,333.34. So, the total tax due for the regular is 533,333. Okay? So, same lang sila. Papahabain mo pa ba? Dun ka na lang sa transitory rate given by this regulation. So for taxpayer who have already filed their income tax return for the taxable year 2020, so you may amend your income tax return using the transitory rate per above matrix, and any resulting excess or overpayment can be claimed for refund carry over to the next taxable year. At taxpayer's option, kayo pa rin po yung magde-decide. Next slide. So that's all. So don't forget pa rin po na mag-like sa Abby Facebook page. Thank you. For more clarification, we have RMC 62-2021. Meron dong question and answer related po dito sa ating RR5-2021. Thank you and God bless.
Thank you, Ms. George. Now, to continue with our discussion, let me introduce to you our last keynote speaker this afternoon. She graduated with a Bachelor of Science in Accountancy degree at the University of the East. Certified public accountant and currently taking a master's in business administration. She is an experienced and skilled revenue officer of this district, serving the bureau in this country for 6 years already. Let us all welcome the last keynote speaker for this session, Ms. Maria Carina De Pan.
Good afternoon, everyone. Nakikita na yung slide. So good afternoon again, everyone. I am Maria Carina De Pante, also a member of the assessment section of RDO24 Valenzuela. So what I am discussing for this afternoon is all about revenue regulation. Revenue Regulation number 4-2021. Included na rin po dito yung mga amendments pursuant to Revenue Regulation 8-2021. So, RR 4-2021 implements the new items of VAT exemption and temporary reduction of percentage rate under RA number 11534 or the CREATE Act. So, ito pong RR 4-2021, dito po nakapaloob yung mga bagong items ng VAT exemption po natin. Also included dito yung temporary reduction ng percentage tax rate. So this RR was published in the Philippine Star on April 9, 2021 and took effect 15 days following the publication or until April 24, 2021. The new items of VAT exemptions, however, shall commence upon the effectivity of CREATE Act on April 11, 2021 unless otherwise stated. So later on, i-discuss pa po natin itong item na to because may mga VAT exemption po tayo na expressly provided kung kailan siya magko-commence and meron din tayong mga new item ng VAT exemption na walang nakalagay na effectivity date. So, kapag po walang in-specify na effectivity date, ang i-consider po natin na commencement ng VAT exemption ay upon effectivity of CREATE, which is on April 11, 2021. RR 4-2021 takes the form of an amendment to RR 16-2005 as amended, or what we call the Consolidated VAT Regulation. So 3 new items of VAT exemption. Originally po, there are 4 items of VAT exemption as introduced by CREATE. However, yung isang item which is the VAT exemption on sale of real properties ay na-veto. So na-veto po siya ng President. So tatlo na lang po yung items ng VAT exemption. So first item of VAT exemption, the sale, importation, publication of digital or electronic format of books, any newspaper, magazine, journal, review bulletin, and educational reading materials covered by the UNESCO Agreement on the importation of educational, scientific, and cultural materials. Number 2 item of VAT exemption, the sale or importation of prescription drugs and medicines for diabetes, high cholesterol, hypertension, cancer, mental illness, tuberculosis, and kidney diseases. So ito po yung tinatawag nating mga maintenance drugs. And the third new item of VAT exemption, the sale or importation of capital equipment, spare parts, and raw materials for the production of personal protective equipment or PPE components, the sale or importation of drugs, vaccines, and medical devices for the treatment of COVID-19, including raw materials directly necessary for the production of drugs for treatment of COVID-19. So ito naman po yung mga tinatawag nating temporary COVID-19 measures. Okay. Vetoed VAT exemption. So ito po yung na-veto na VAT exemption. The sale of low-cost housing and residential lot, including the increase of the threshold value thereof from the present 1,919,500 to 2.5 million, and increasing the threshold value of the sale of house and lot and other residential dwellings from the present 3,199,200 to 4.2 million. So, pursuant po to RR 16-2005, yung Consolidated VAT Regulation po natin, meron po tayong ini-enjoy na dalawang VAT exemption on the sale of real properties. Yung una nga po is the sale of house and lot, the sale of residential lot, which is 1,919,500. And then yung VAT exemption po natin on the sale of house and lot and other residential dwellings amounting to 3,199,200. With CREATE, ang gusto lang po sana nating gawin is to increase yung VAT exempt threshold po to 2.5 million and to 4.2 million. However, ito po ay na-veto na ng President. So, yung mga items na to ay hindi na po VAT exempt. Okay. So take note, the adjustment of the threshold amount of 1.5 million for sale of residential lot and 2.5 million for sale of house and lot and other residential dwellings in 2011 using the 2010 CPI was made through RR 16-2011. So as discussed earlier, under RR 16-2005, 1.5 million ang VAT exempt threshold natin for residential lot and 2.5 million ang VAT exemption natin for house and lot and other residential dwellings. And then in-update po siya under RR 16-2011, naging 1,919,500 and 3,199,200. So ito po mga VAT exempt thresholds na to, ini-enjoy po natin up until December 31, 2020. So, beginning January 1, 2021, yung VAT exemption po natin on sale of real properties shall only apply to, ito lang po, starting January 1, 2021, itong mga items lang na to ang kasali sa VAT exempt transactions natin. So, number 1, the sale of real properties not primarily held for sale to customers or held for lease in the ordinary course of trade or business. So ito po mga real properties na ito po yung mga tinatawag natin mga capital asset. So if it is a capital asset, VAT exempt po yun. And then number 2, the sale of real property utilized for socialized housing as defined by Republic Act number 7279 as amended. Or ito po yung Urban Development and Housing Act. And then the third VAT exemption on sale of real property, the sale of house and lot. and other residential dwellings. So ito na lang po yung natira. The sale of house and lot and other residential dwellings with selling price of not more than 2 million as adjusted in 2011 using the 2010 Consumer Price Index values, provided that every 3 years thereafter, the amounts stated herein shall be adjusted to its present value using the CPI values as published by the Philippine Statistics Authority. So under RR 4-2021, ang ini-exempt na lang po natin na sale of real properties, yung sale of house and lot and other residential dwellings amounting to not more than 2 million. Okay. And then it was RR 14-2021 was further amended under RR 8-2021. So prior to January 1, 2021, the VAT exempt threshold for sale of house and lot and other residential dwelling was 3,199,200. The VAT exempt threshold of 3,199,200 was enjoyed by the tax-paying public from January 1, 2012 until December 31, 2020 or for 8 long years. As such, fairness and equity dictate that the VAT exempt threshold under RA 10963 or the train law of 2 million for sale of house and lot and other residential dwellings should also be adjusted to 3,199,200 in 2011 using the 2010 CPI values beginning January 1, 2021. So under RR 8-2021, yung 2 million na VAT exempt threshold po natin for the sale of house and lot and other residential dwellings, ibinalik na po sa 3,199,200 beginning January 1, 2021. So beginning January 1, 2021, only those 3 items of sale of real properties are exempt from VATs. Ano po ulit yung mga tatlong items? The first one, the sale of capital asset. And then number 2, the sale of real properties used for socialized housing. And then number 3, the sale of house and lot and other residential dwellings with VAT threshold of 3,199,200. Yun na lang po yung mga sale of real properties na VAT exempt. The sale of residential lot, regardless of value, is now subject to VAT. Pero syempre, we must also consider na the seller must be engaged in real estate business. Kasi kung hindi naman po engaged sa real estate business yung seller, it is considered as capital asset. And then the sale of low-cost housing, VAT exempt if the amount falls within the 2 million threshold as adjusted in 2011 using the 2010 CPI values or up to the amount of 3,199,200, subject to VAT if it exceeds 3,199,200. Okay, let's now go on to our first new item on VAT exemption. So the first item on VAT exemption is the sale, importation, printing, or publication of the digital and electronic format of books and any newspaper, magazine, journal, review bulletin, or any such educational reading material covered by the United Nations Educational, Scientific, and Cultural Organization or the UNESCO Agreement on the Importation of Educational, Scientific, or cultural materials. So previously po, ang ini-exempt natin is the sale, importation, printing, or publication of books, yung hard copies. Now with CREATE, inintroduce na rin po sa ating exemption yung sale, importation, printing, or publication of digital and electronic format of books. What are the requirements to warrant VAT exemption? So number 1, that the materials enumerated herein are not devoted principally to the publication of paid advertisements. And 2, that the materials enumerated herein are compliant with the requirements set forth by the National Book Development Board pursuant to RA number 8047 or the Book Publishing Industry Development Act. The VAT exemption of the sale, importation, or publication of the digital and electronic format of books begins upon the effectivity of CREATE on April 11, 2021. So ito po yung dinidiscuss natin kanina na since hindi expressly provided kung kailan po mag-start or magko-commence yung VAT exemption ng digital and electronic format of books, ang iti-take po natin na date as commencement is upon the effectivity of CREATE on April 11, 2021. The second item of VAT exemption, the sale or importation of prescription drugs and medicines for item 1, diabetes, high cholesterol, and hypertension beginning January 1, 2020 onwards. So ito po, good news for everyone na may mga maintenance or prescription drugs. Indefinite na po itong mga VAT exemption na to. Beginning January 1, 2020 for the prescription drugs on diabetes, high cholesterol, and hypertension. And for the drugs naman for cancer, mental illness, tuberculosis, and kidney diseases, VAT exempt na po siya beginning January 1, 2021 onwards. Okay, what are the requirements to warrant VAT exemption? The drugs and vaccines are included in the list of approved drugs and medicines issued by the Department of Health. Once the BIR receives the DOH list of approved drugs and medicines, the Commissioner of Internal Revenue issues a revenue issuance circularizing the DOH list for the information and observance of all concerned revenue personnel. So kailangan po yung mga drugs and medicines para maging exempt ay included sa list of approved drugs and medicines na i-issue po ng Department of Health. Pag hindi po included dito sa list yung mga drugs and medicines na binibili po ninyo, hindi po yon VAT exempt. Okay, the third new item of VAT exemption, the sale or importation of the following beginning January 1, 2021 to December 31, 2023 or for a 3-year period. So ito po yung tinatawag nating VAT exemption as temporary COVID-19 measures. So ito po, inintroduce para i-relieve po tayo dun sa burden ng COVID-19. So, for a 3-year period lang siya, beginning January 1, 2021 to December 31, 2023. The VAT exemption po ng item number 1, the capital equipment, its spare parts and raw materials necessary for the production of personal protective equipment or PPE components such as coveralls, gowns, surgical cap, surgical mask, N95 mask, scrub suits, goggles and face shield, double or surgical gloves, dedicated shoes and shoe covers for COVID-19 prevention. Then item 2, all drugs, vaccines, and medical devices specifically prescribed and directly used for the treatment of COVID-19. And item number 3, drugs for the treatment of COVID-19 approved by the Food and Drug Administration for use in clinical trials, including raw materials directly necessary for the production of such drugs. Okay. What are the requirements to warrant VAT exemption? So for item 1, the Department of Trade and Industry or the DTI shall certify that such equipment, spare parts, or raw materials for importation are not locally available or insufficient in quantity or not in accordance with the quality or specification required. So para po ma-warrant yung VAT exemption ng sale or importation of raw materials for the production of PPE components, kailangan po hindi siya locally available. Kailangan i-certify po ng DTI na hindi siya locally available. Because if it is locally available, hindi na po siya VAT exempt. For item number 2, the prescription drugs and medical devices are included in the DOH list to be issued within 60 days from the effectivity of the CREATE and every 3 months thereafter. So yun po, kailangan din po included daw sa DOH list. Pag po hindi included sa DOH list yung prescription drugs and medical devices, hindi rin po iyon VAT exempt. For items 1 and 3 on the sale or importation of equipment, spare parts, and raw materials for the production of PPE components, as well as the sale or importation of raw materials directly necessary for the production of drugs for the treatment of COVID-19, the suppliers or importers shall submit for the purpose of availing the exemption the following. So para daw po enjoy po nila or ma-avail po nila yung exemption for items 1 and 3, kailangan po is secure po nila itong mga to. Number one, the certified true copy of license to operate issued to the manufacturer buyer by the DOH FDA authorizing the manufacture of medical grade PPE components and drugs for the treatment of COVID-19. And number two, sworn declaration from the manufacturer buyer that the items shall be used for the manufacture of the PPE components and drugs for the treatment of COVID-19. So ito pong mga requirements na to, inilagay po ito dito para ma-prevent po yung abuse ng VAT exemption na to. Para ang talagang makapag-avail lang po nito is yung mga legitimate PPE manufacturers. In item number one, what is VAT exempt is the sale or importation of capital equipment, spare parts, and raw materials for the production of PPE components. Thus, the sale or importation of finished PPEs is subject to VAT unless they are also VAT exempt pursuant to other provisions of the tax code. So, ang VAT exempt lang daw po is yung sale or importation of capital equipment, spare parts, raw materials for the production of PPE components. Okay. This is an amendment under RR 8-2021. So, with the intensified campaign of the government to inoculate the population aimed at achieving herd immunity and to require the use of medical grade PPE components as protection against COVID-19, there is a need to facilitate the early release of imported items under Section 2, subsection 4.1091 of RR 4-2021 from the Bureau of Customs. So, ang inamend po dito under RR 8-2021, yung importation daw po ng items under 1, 2, 3, which is yung temporary COVID-19 measures natin, shall not be subject to the issuance of the authority to release imported goods or ATRIG under Revenue Memorandum Order number 35-2002 as amended and may be released by the Bureau of Customs without the need of an ATRIG. So, ito nga po, kaya po tinanggal na po itong ATRIG na ito to facilitate yung early release ng mga imported items natin from the Bureau of Customs. So, conduct of post-audit, the exemption claimed hereunder shall be subject to post-audit by the Bureau of Internal Revenue or the Bureau of Customs as may be applicable. Okay, Section 2, the reiteration of the 3 million VAT exempt threshold. So, yung 3 million VAT exempt threshold po natin, it was introduced under train law. Hindi po siya in-introduce ni Create. Under train law, ini-enjoy na po natin itong 3 million VAT exemption. The sale or lease of goods or properties or the performance of services other than the transactions mentioned in the preceding paragraphs, the gross annual sales and or receipts do not exceed the amount of 3 million pesos. So ito po, i-discuss po natin this afternoon to emphasize yung reduction po ng percentage tax rate natin. Okay, so tax on persons exempt from VAT. Any person whose sales or receipts are exempt under Section 1091cc of the tax code from the payment of VAT, for example, falling under the 3 million VAT exempt threshold, and who is not a VAT registered person shall pay a tax equivalent to 3% of his gross quarterly sales or receipts, provided that effective July 1, 2020 until June 30, 2023 or for a 3-year period, the rate shall be 1%. So yung previous po na percentage tax rate natin na 3%, ginawa na po siyang 1% effective July 1, 2020 until June 30, 2023 or for a 3-year period. So pagdating po ng July 1, 2023, babalik na po ulit yung old rate natin, which is 3%. The following, however, shall be exempt from the payment of 3% percentage tax, including the reduced rate of 1%. So ito po yung mga business entities or mga juridical persons na hindi subject sa 3% tax rate as well as sa reduced rate ng 1%. So number one, cooperatives, hindi po sila subject sa 3% percentage tax rate or the reduced rate of 1%. And number two, self-employed individuals and professionals availing of the 8% tax on gross sales and or receipts and other non-operating income under Section 24A2B and 24A2C2A of the tax code. Purchases made by the GOCCs, national government agency, local government units, and other instrumentalities of the government from persons or entities subject to percentage tax under Section 116 of the tax code as amended shall be subject to 1% withholding tax for the period July 1, 2020 until June 30, 2023. So, 3-year period din po iyon. Section 3 for the transitory provisions, a VAT registered taxpayer who opted to register as non-VAT as a result of the additional VAT exempt provisions as introduced by CREATE, provided that it did not meet the threshold set under Section 1091cc thereof. So kapag daw po yung mga VAT registered taxpayer, pinili na pong mag-register as non-VAT because na-qualify na sila dun sa VAT exempt, new items ng VAT exemption po natin. So, kapag hindi naman po nila na-meet yung 3 million VAT exempt threshold po natin, ito po yung mga remedy na, ito po yung mga steps na gagawin po nila para ma-register na sila as non-VAT. So, number one, submit an inventory list of unused invoices and or receipts as of the date of filing of application for update of registration from VAT to non-VAT, indicating the number of booklets and its corresponding serial numbers. So, kung papalitan na po natin yung registration nyo from VAT to non-VAT, yung mga resibo nyo po, yung mga VAT registered invoices nyo po, isosurrender nyo na sa BIR for destruction. Kasi papalitan na po natin yan ng non-VAT registered invoices. So, B, surrender the said invoices and or receipts for cancellation. A number of unused invoices or receipts as determined by the taxpayer with the approval of the appropriate BIR office may be allowed for use, provided the phrase non-VAT registered as of date of filing an application for update of registration, not valid for claim of input tax, shall be stamped on the face of every copy thereof until new registered non-VAT invoices or receipts have been received by the taxpayer or until August 31, 2021. So sabi po dito, yung mga VAT registered invoices po natin, pwede pa po nating gamitin with the approval of the appropriate BIR office. Provided na i-stamp po natin yung phrase na to, non-VAT registered as of date of filing on application for update of registration, not valid for claim of input tax. So, pwede po natin gamitin ito until makapag-register ulit tayo ng non-VAT invoices or until August 31, 2021 lang. Upon receipt of newly printed registered non-VAT invoices or receipts, the taxpayer shall submit immediately a new inventory list of and surrender for cancellation all unused previously stamped invoices or receipts. So pag na-print na daw po yung mga bagong non-VAT invoices natin, is-surrender na ulit natin yung mga in-stamp. The taxpayer shall treat the resulting excess taxes paid due to the inclusion in the items exempt from VAT in the following manner. So, ito naman po, paano daw po ba natin i-treat yung mga excess taxes paid natin? Because due to the inclusion in the items exempt from VAT, so, ito na po yung magiging treatment po natin sa mga excess taxes paid. For the unutilized VAT paid on local purchases and importation under subsection 4.1091B, the sale or importation of prescription drugs for cancer, mental illness, tuberculosis, and kidney diseases, and the sale or importation of capital equipment, spare parts, and raw materials for PPE production, the sale or importation of drugs, vaccines, and medical devices for the treatment of COVID-19 from their specified effectivity on January 1, 2021 until the effectivity of these regulations may be, ito po yung pwede nating gawin, carried over to the succeeding taxable quarter or be charged as part of the cost pursuant to Section 110 of the Tax Code. Or input VAT which are directly identifiable to goods now classified as VAT exempt may be allowed as part of the cost. For input VAT that can be identified to goods now classified as VAT exempt, only the ratable portion shall be charged to cost. Okay. For the excess percentage tax payments naman po, since yung reduction ng percentage tax natin started July 1, 2020. So, nakapag-file na po tayo ng third and fourth quarter 2020 na 3% percentage tax rate. So, obviously, meron po talaga tayong overpayment of percentage tax payment. So, ano daw po ba yung pwede nating gawin for the overpayment ng percentage tax? So, until may be carried forward to the succeeding taxable quarter. Yung excess payment po natin may be carried forward to the succeeding taxable quarters by reflecting the excess percentage tax payment under line 17 of the quarterly percentage tax return or the BIR form 2551Q, other tax credit or payments, specifying therein as carryover excess percentage taxes paid from previous quarter. So excess payment po natin from the third and fourth quarter of 2020, pwede po nating i-carry forward yon sa mga succeeding quarters ng 2021. So, para po magamit po natin itong mga excess payments na to as carryover, syempre kailangan po natin i-amend yung third and fourth quarter. Hindi po natin pwedeng gamitin na carry over yung excess percentage tax payment po natin pag hindi po natin in-amend yung ating third and fourth quarter percentage tax return for taxable year 2020. So, ito po, amendment under RR 8-2021 because nung in-issue po yung RR 4-2021, yung remedy lang po na binigay sa atin for the excess percentage tax payments was to carry it forward. Pero with RR 8-2021, nagdagdag po sila ng other remedies. So, percentage taxpayers who have overpaid taxes as a result of the decrease of tax rate from 3% to 1% starting July 1, 2020 until the effectivity of RR number 4-2021 are allowed for a tax refund in the event that, so ito lang po yung mga instances na pinapayagan po nating tax refund ng excess ng percentage tax payment. So, A, the taxpayer shifted from non-VAT to VAT registered status. So, pag yung taxpayer po, nag-shift na siya from non-VAT noong 2020 and then naging VAT registered na siya noong 2021, yung excess percentage tax payments po niya ng 2020, pwede na po nating i-process as tax refund. And then B, the taxpayer has opted to avail the 8% income tax rate at the beginning of 2021. So pag po si taxpayer, nag-avail po siya ng 8% income tax rate beginning taxable year 2021, hindi po kasi sila na required to file yung percentage tax. So yung excess payment po ng third and fourth quarter of 2020 may be applied for a tax refund. Lang po yung dalawang instances na pinapayagan po natin ang tax refund for the excess payment of percentage taxes. Pag po hindi kayo nag-fall under these two conditions, yung remedy nyo lang po for the excess percentage tax payments ay i-carry forward ito sa mga susunod na taxable quarters. For the excess or unutilized input taxes as a result of the change of status from VAT to non-VAT registration under Section 112P of the Tax Code of 1997 as amended may be applied for refund or the issuance of tax credit certificate at the option of the taxpayer. So ito naman po, the excess or unutilized input taxes naman po as a result from the change of registration from VAT to non-VAT. So VAT siya nung 2020 and pagdating ng 2021 naging non-VAT, pwede daw pong i-apply for refund or issuance of tax credit certificate at the option of the taxpayer. Okay, so that ends my discussion on VAT. Please stand by pa po. Sorry for the long discussion. We still have one topic for this afternoon, pero short na lang naman po siya. Okay, for our last topic for this afternoon, Revenue Regulation number 2-2021. So, kanina po under income tax, under RR5-2021, na tackle na din naman po yung ibang mga final tax on certain passive income. So, medyo mabilis na lang po yung discussion natin dito. So, Revenue Regulation number 2-2021, amending certain provisions of RR number 2-1998 as amended to implement the amendments introduced by CREATE to the NIRC of 1997 as amended relative to the final tax on certain passive income. So pursuant to the provisions of Section 244 of the NIRC in relation to Section 21 of CREATE, certain provisions of RR 2-1998 as amended are hereby further amended to implement the new final tax rates on certain passive incomes of individuals and corporations as prescribed under the aforesaid Act. So, under RR 2-2021, meron po tayong tatlong items ng RR 2-1998 na inamend. So, tatlong items lang po yung inamend doon. So, yun po yung Section 2.57.1, Subsection B, Subsection E, and Subsection F. So, ito lang po yung mga inamend ng RR 2-2021. So, Section 2.57.1, income payment subject to final withholding tax. The following forms of income shall be subject to final withholding tax at the rates herein specified. So for subsection B, income payments to non-resident aliens engaged in trade or business in the Philippines. So the following forms of income derived from sources within the Philippines shall be subject to final withholding tax in the hands of a non-resident alien individual engaged in trade or business within the Philippines based on the gross amount thereof and at the tax rates prescribed therefore. So, ito po, a tax of 20%, final tax rate of 20% is hereby imposed on certain passive income received from all sources within the Philippines. So, A, the cash and property dividend from a domestic corporation or from a joint stock company or from an insurance or mutual fund company or from a regional operating headquarter of a multinational company, 20% final tax rate. Item B, the share in distributable net income after tax of partnership, except GPPs or the General Professional Partnership, of which he is a partner, or share in the net income after tax of an association, a joint account or a joint venture of which he is a member or a co-venturer, 20% final tax rate din po yun. Interest from any currency bank deposit and yield or any other monetary benefit from deposit substitutes and from trust funds and similar arrangements. D, royalties, 20% final tax rate din po yan, except royalties on books, as well as other literary works and musical compositions, which shall be subject to 10% final withholding tax. And E, prices, except prices amounting to 10,000 or less, which shall be subject to tax under subsection B1 of Section 24 of the Tax Code as amended, and other winnings, except winnings from PCSO games amounting to 10,000 or less, which shall be exempt from income tax. So dito po sa subsection B na ito, items A hanggang E, ang inamend lang po dito is yung item E, which is the prices. Prices on PCSO winnings. Kasi dati po, pag po, yung winnings po natin from the PCSO is exempt po sa tax. However, dito po sa RR2-2021, ang exempt na lang po sa tax na PCSO winnings, yung mga amounting to 10,000 or less lang po. Pag nag-exceed ng 10,000, yung mga PCSO winnings natin sa Lotto, subject na po yun sa tax na 20%. Item E of RR2-2021, income payment to resident foreign corporation. So the following forms of income shall be subject to a final withholding tax in the hands of a foreign corporation based on the gross amount thereof and the rate of tax prescribed therefore. So for tax on branch remittances, 15% po yan on any profit remitted by the Philippine branch of a foreign corporation to its head office abroad based on the total profits applied or earmarked for remittance without any deduction for the tax component thereof, except those registered with the Philippine Economic Zone Authority or PEZA. So tax on branch remittances, 15%. Number 2, interest on any currency bank deposit and yield or any other monetary benefit from deposit substitutes and from trust funds and similar arrangements and royalties derived from sources within the Philippines, 20%. Item 3, interest income derived from depository bank under the expanded foreign currency deposit system, 15%. So ito po yung inamend dito because the old rate for the interest income derived from depository bank was 10%. So ngayon, 15% na po siya. And then number 6, capital gains from sale of shares of stocks not traded in the stock exchange. So on the net capital gains realized during the taxable year from the sale, barter, exchange, or other disposition of shares of stocks in a domestic corporation, 15%. So previously po, ang tax po nito is either 5% or 10%. Pero ngayon, pinag-isa na po ang capital gains from sale of shares of stocks not traded on stock exchange, 15% final tax rate na po yun. Okay. Item F, the income derived from all sources within the Philippines by non-resident foreign corporation. So the following shall be subject to final withholding tax based on the gross amount of income and at the rate of tax prescribed therefore. So number 1, in general, on gross income derived from all sources within the Philippines, such as interest, dividends, rents, royalties, salaries, premiums, except reinsurance premiums, annuities, emoluments, or other fixed or determinable annual, periodic, or casual gains, profits, and income and capital gains, except capital gains realized from sale, exchange, disposition of shares of stocks in any domestic corporation which is subject to capital gains tax under item 7 hereof. So from January 1, 2021 onwards, 25% na po yan. Dividends received from a domestic corporation, in general, it is subject to 25% final withholding tax. However, a reduced rate of 15% shall be applied subject to the condition that the country in which the non-resident foreign corporation is domiciled. So yung dividends daw na received from domestic corporation, in general, 25% po yun. Pero pwede nilang i-avail yung reduced rate of 15% subject to the following conditions. So condition A, that the country in which the non-resident foreign corporation is domiciled shall allow a credit against the tax due from the said non-resident foreign corporation, which are equivalent to taxes deemed to have been paid in the Philippines equal to 10%, effective January 1, 2021, which represents the difference between the regular income tax rate for non-resident foreign corporation under Section 28B1 of the NIRC of 1997 as amended, and the 15% tax on dividends as herein provided, or does not impose, or the country in which the non-resident foreign corporation is domiciled does not impose any income tax on dividends received from a domestic corporation. So take note of the word use. Ang nakalagay lang po dito or. So whichever is, kung ano man po yung masatisfy niya dito, the condition A or condition B, kahit isa lang po yung masatisfy niya, pwede na po siyang mag-qualify for the reduced rate of 15%. Okay. For the capital gains from sale of shares of stocks not traded in the stock exchange, as discussed earlier, 15% na po siya from the previous rate of 5% or 10%. Purchases made by the government-owned and controlled corporations, national government agencies, local governments, and other government instrumentalities from persons or entities subject to percentage tax pursuant to Section 116 of the Tax Code as amended, shall be subject to 1% withholding tax for the period July 1, 2020 until June 30, 2023. So yung reduced rate po na 1%, for the period of July 1, 2020 hanggang June 30, 2023 or for a 3-year period lang. Pagdating ng July 1, 2023, babalik na po tayo sa old rate natin which is 3%. So any taxes withheld from persons or entities for the withholding agents use the rate higher than what are imposed in these regulations may be claimed as tax refund by the withholding agents if the withheld taxes have already been remitted, provided that in case the withholding agents or other persons or entities shall file the claim for refund for or on behalf of the payees, they must be duly authorized by said payees. The claim for refund shall be filed within the Revenue District Office or large taxpayer service having jurisdiction over the withholding agents. So that ends my presentation on the final tax rates. Thank you.
Thank you, Ms. Karina, and thank you again to the both of you for the very informative and eye-opening presentation. I'm sure that our participants learned a lot from you. At this juncture, we will go ahead with our tax quiz. Please be sure to type your answers in the chat box in your control panel. The first to answer will receive a prize from your RDO24 family. Just a reminder, after the tax quiz, we will be having picture taking for our documentation, which will serve as your attendance. Thank you, Bisor.
Hello, good afternoon. So we have our tax quiz on create law. Are you listening, participants? Yes, okay. So get ready po ito po yung ating rule sa ating tax quiz. So, take note, you will answer the tax quiz sa tax box, sa chat box po natin. First one to get the correct answer will be the winner. So to answer, please write the question number and then the letter of your answer. So example, 1.A, kung ang A ang iyong answer. So for question number 1, Miss Karina.
For the total assets, if only a portion of the floor area, 2,000 square meters of the building, is devoted to the entity's office and the rest of the usable floor area are on lease. The total floor area of the building is 5,000 square meters and the total value of the building is 8 million. Ito po, choices niyo po. A, 1 million. B, 8 million. C, 2.2 million, or D, 3.2 million?
Sino po yung nauna?
Ay, wala.
Okay. First one who got the correct answer is Cristel T.
Ano sagot?
So the answer is letter D. Sinabi ko na ba? Letter D, si Cristel T ang nanalo. So to illustrate, so yung 2,000 floor area devoted for the office, tanggalin po natin yung, syempre, yung for the lease kasi 3,000 yung ginagamit niya, pinaparentahan niya over the total area ng building na 5,000 square meters multiply by 8 million, which is the total value of the building. The answer is 3.2. Okay? So, si Cristel T po. Ma'am Cristel T, kindly chat your information, full name, and your contact number. And email. Sorry. Next question.
Next question po. GTZ Corporation, a domestic corporation, owns 20% of the outstanding shares of UK Corporation, a non-resident foreign corporation, since 2015. On May 1, 2021, it received dividends amounting to 1 million from the said NRFC. So on January 1, 2023, it utilized the 200,000 for its working capital requirements and the other 800,000 on June 3, 2023. How much will be included in the taxable income 2021? Here are the choices. Letter A, 1 million. B, 200,000. C, 800,000. Or D, 0, not taxable.
The correct answer is 1 million shall be declared as taxable income for the taxable year 2021, subject to surcharge, interest, and penalty, since the utilization is not within 1 year following the declaration. So, sino po yung nanalo? Number 2. Si Mega Master Link. Mega Master Link, kindly chat your full name and your GCash. Ay, yung cellphone number and email. Next.
So ito po, third and last question na po natin for tax quiz. So galingan niyo po sumagot. The decrease of percentage tax rate from 3% to 1% effective July 1, 2020 until June 30, 2023 pursuant to Section 13 of RA number 11534 intended for corporate taxpayers only. So, ang choices niyo po, A, the statement is true. True daw po ba yung statement na to? Or B, the statement is false? Or C, 50% true and 50% false? Or D, I really don't know.
So the correct answer is letter B. The statement is false. So Section 116 of the Tax Code applies both corporate taxpayers and self-employed individuals and professionals whose gross sales and gross receipts are not exceeding 3 million threshold, except for the cooperatives and self-employed individuals and professionals availing the 8% income tax rate. So the winner is Kim Christian Natividad. Kim Christian Natividad, congratulations. Congratulations to all the winners. Kindly message your full name, contact number, and email for your GCash prize.
Okay, it looks like we've covered all our questions in the tax quiz. Congratulations to all the winners. Um, Now, for our closing remarks, let me hand you over to another hardworking leader of this district, our assessment section chief, Brigida C. De Perry. Thanks.
Sayuda ako. Hello. Okay na. Hi. Good afternoon po ulit sa inyong lahat. Mukhang may technical problem dun sa aking phone or computer. So, to our dear taxpayers, good afternoon. I wish to thank Ma'am George and Miss Karina for that very informative and comprehensive discussion of the CREATE law. As earlier discussed by our research speakers, the CREATE law is the second package of the comprehensive tax reform program that provides tax relief measures that will help businesses recover from the effects of the COVID-19 pandemic. Among the provisions, as discussed, are the reduction of income tax rates from 30% to 25% for corporate taxpayers in general and to 20% for other corporate taxpayers subject to certain qualifications effective July 1, 2020. It also repealed the imposition of improperly accumulated earnings tax previously provided under Section 29 of the Tax Code. It also reduced the NCIT rate from 2% to 1%. It also reduced the percentage tax rates from 3% to 1%. So both the MCIT and percentage tax rate of 1% is currently being used until June 30, 2023. And of course, the CREATE law provides tax incentive provisions to attract local and foreign investments in the Philippines. Once again, this webinar has been part of our continuing tax awareness program activities to keep you well informed of important tax updates. We would like to thank all of you po for your continued support and cooperation. We leave you with some reminders na po before we close. For the next coming weeks, we have webinars lined up to be conducted. Just visit po our Facebook page, RDO24 Valenzuela, where the schedules are being posted. May we also remind you of your quarterly 1601 EQ and 1601 FQ due on the 31st. If you could please file and pay them within the week po, the last working week for the month of October. And also, if you have tax issues and concerns, please feel free to come and visit our office or call us anytime po. And so, for and in behalf of RDO24 Valenzuela, headed by our RDO Sir Stimson P. Correct and our Assistant RDO Ma'am Florita Morales, we would like to thank all of you po for joining us in this webinar. Stay safe po kayo lahat. God bless us all. Thank you very much.
Thank you, Ma'am Cass. Thank you, Ma'am Cass. Hi, everyone. Can you please open your camera for our picture taking? Nag-open naman. Again, can you please open your camera for our picture taking, for our documentation?
Wait lang po.
Okay na ba siya?
Stay na to si Cass.
Hintayin si Cass.
Kung maganda naman yung camera niya, yung audio lang ako.
Nandiyan na ba siya? Okay. Be ready. 1, 2, 3. Go. Smile. Another one. 1, 2, 3. Smile. Thank you very much again. Thank you all. Thank you.